Good morning, everyone. I have 9 o'clock. The wait is finally over. Thank you for everyone for being patient and welcome to our meeting today. The first item we have on our agenda is the acceptance of the minutes from the August 1st meeting. At this time, I will entertain a motion to accept those minutes. Don't everybody jump at once.
I'll move to accept the minutes.
All right, we got a first. Do we have a second? All right, a first and a second. All right, you guys ready for the question? All in favor, state by saying aye.
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 All opposed? Hearing none, the minutes are accepted unanimously. The next item on our agenda is the finance update. I believe we have Ms. Jenkins on. So it's yours, ma'am. Take it away.
Good morning. Pardon me. So in finance, we are progressing along with our audit. And on a bright side, everything's looking good. I believe they've actually started work on the ACFR, previously referred to as the CAFR. So our timeline is looking good. We are preparing on the budget side to start looking at our projected ending fund balance. We can usually get a better idea after the third calculation, which comes usually around right when we leave for winter break or right when we get back. It varies year to year. So I'm hoping to see that before we leave. And then I will hand it over to Mr. Nunez for any comments he would like to make.
Hey, good morning. I didn't see the full agenda for the meeting, but I know that Luke was just reminding me that one of the items is to give an update on both the audits that we have ongoing currently. So I'll go ahead, since Heather mentioned those, and give an update. Regarding our internal funds audit, we are almost done with that. CRI, Jennifer with CRI, I have a call into her this afternoon to discuss the final items that are left. We have a few items from workforce that we're still waiting on to get to her, but it looks like we'll be done this month and she'll be ready to issue her audit report now during the month. Regarding our district-wide audit, if you recall last year, it was very behind getting it finalized. There was a lot of turnover during the summer last year. When I came on board, it was towards the end of September. Then we had the hurricane, and then we had some other challenges getting everything that was required to the auditors. We had some grants that were unique that took place during 21-22 that also presented some challenges. It was the Emergency Connectivity Fund, the ECF grant that came through, that is a one-time grant that came down. So it had some unique reporting requirements and different things we had to provide in order to push through that side of the audit. As Heather mentioned, this year we went into it full force, ready to go before the audit schedule even started. We have been working with CLA. It's the same firm this year, actually for the 22-23 year that audited in 21-22. So we were prepared at the launch to get them all the reports they needed right away. The grants that they selected this year also, those grant managers are doing a great job of providing all the documentation when it's requested in a timely manner. I also have a status meeting with them today. We have a weekly status meeting to go over any outstanding items. From what I could tell, we are on schedule to finish in January, which was the plan for them to be able to submit their audit report in January to then be able to present it to the board in February and get it to the state before the March 31st deadline. Any questions or?
Thank you, Mr. Nunez, Ms. Jenkins. You guys do a wonderful job. Great update, and I appreciate you stepping in and putting that one up, because now we can move through our agenda more swiftly. So thank you so much for that. Now we're going to move on to the internal audit update. I believe, Mr. Witt, you have those, and Mr. Oreo, if you'll go with those. And you guys should have received that report too. If anybody doesn't have it, let us know and we'll get it to you quickly.
Yeah.
Travis, can you hear me?
Yes, ma'am.
Hello.
Yes, ma'am.
Sorry, I wanted to comment on Mr. Nunez's comment. He indicated that they are on schedule this year to complete it in January, present it to the board, and then, move forward. And I just want to say that's a great job that our staff has done to turn that audit process around and to be able to provide it in a timely manner. And I know what kind of work that entails internally with everything else going on. So I just wanted to say, please pass along on behalf of the board our thank you for the hard work and dedication to get us on track for our district audit this year. Thank you, Travis.
Absolutely. Thank you, Ms. Cunningham. And you're right. And I'll kind of echo that too. I know that last year there were a lot of challenges, and as Mr. Nunez stated, with staff turnovers and inclement weather. So again, I'll echo what Ms. Cunningham said. That is an absolutely wonderful thing. We're glad to see that that's on track, and excited them to finish in January and to present to the board in February. So appreciate that.
Lion, did you want to go over any of the September financials, or do you want to? I don't know if you normally do that during the meeting or not.
Yes, I do. I didn't know in which order we were going to go. I can go ahead and present those now.
Okay.
Yeah, that's fine. We can do that.
Let me share my screen. So you should be able to see you got a copy of these emailed to you. These are our September financial statements. We're set to close October this week. There was a bit of a delay with closing October on time. And I'll speak more to that when I get to the page to explain that. But we've got that squared away. And so we should be closing October. So the next time we meet, you should have October's financials, December's. Our next meeting should be in March. So by then you should have through January as well. So I'll start first off with our balance sheet across all funds. For the general fund, our total assets ending for the first quarter were $277 million. I wanted to point out, as you may recall, we changed our capitalization threshold starting this current fiscal year from $1,000 to $5,000 to better align with state and federal grants and the state guidelines. Also, just the sheer amount of technology that the district has been purchasing one-to-one. We were creating a lot of assets for tablets and computers. Those are still being inventoried and tracked, although they're not being recorded as assets anymore. They're now being tracked through software that IT has in place called Incident IQ that provides better functionality than our ERP system could. With going one-to-one, there was the need to be able to track those devices down to the user level. And we do not keep student data in SAP in our ERP system. So that was something we had to work out, and also took that opportunity to increase our threshold so that we're, like I said, we are better aligned. We were having issues occasionally with certain grants where their threshold was 5,000. We were capitalizing things that they did not agree with. They wanted us to follow their rules. We had to follow our board policy. So it was always a conflict back and forth. And it's keeping in line with what other government agencies are doing as well. So especially here on the furniture, fixtures, and equipment, you'll notice $17 million is what we're listing currently for our assets. So I went and did a comparison to where we ended the year And so what we've been doing is since the beginning of the year is retiring. During the first quarter, we started retiring a lot of those assets out of the system. So that represented about a $30 million decrease in the number of assets that we were listing there by removing a lot of those assets that were under the $5,000, the new threshold. That additionally was part of the reason why October has not been closed yet. There were some errors in the system with SAP when we retire those that we had to work through. It is a very lengthy process as well to retire those assets. We have a limited amount that we can run each day, and we're looking at over 200,000 assets, things that were under $1,000. Some of the devices we were tracking, plus everything that was between $1,000 and $5,000. Our total liabilities for the general fund ending in September was $172 million. I want to step back really quickly and point out here under our general fund and under our capital projects fund, where you see taxes receivable, that is our budget for the year. For our local tax dollars, our ad valorem taxes, we've already started to receive that. That normally starts to come in now during the start of December as tax bills go out and people start to pay their property taxes. But that is our budget amount. Last year, I believe we came in over budget. Obviously, the county is growing and property values are getting much higher, plus the addition of new property year over year. So it's a good thing for the school district to have that extra revenue coming through, but that also means increased expenses as we have to now manage the extra capacity in students and be able to add new schools. And well, I'll let Heather speak more to that if she wants later on. That's more of her wheelhouse. I just wanted to point that out because it is an increase over previous years, but that's just the nature of the current economy that we're in right now. Our current fund balance ending for the general fund, our unassigned fund balance is $72, almost $73 million. That is where we typically use, that's what we typically use to calculate what our fund balance percentage is going to be. When I get to that slide, I'll explain some more because that one is really showing a projection of what our year end is going to be. But like Heather mentioned before, we won't really know that till we get further into the year and we actually start to receive those revenue dollars from the state and from our local property taxes. This is just a general summary across all of our funds currently. Like I said, through the end of the first quarter, our general fund, we've received $205 million in revenues year to date, $225 million in expenses, leaving us with $104 million in that fund balance currently. Special revenue, which is comprised of food service and all of our other federal grants, we are at a $25.3 million fund balance. Our debt service funds, $30 million fund balance. Our capital projects funds, year to date, we have not received as much compared to the other funds, but that's because a lot of that is our LCI money, our local property taxes that comes in. So it's not reflected here, but we've already started to receive some of that money during the current month. And then our internal service funds, which is our health insurance, the board did commit to increasing the revenue so that there wouldn't be a premium passed along to employees for this year again. So there has been an increase in revenues compared to prior years. And then our internal funds, where we have an $11.8 million fund balance. This slide here, again, it's just showing our revenues and expenses and our ending fund balance across the major fund groups. Again, it is just the first quarter, so all of those will increase as we go along. This is our general fund here. Let me get this out of the way. So our budgeted revenues for the year is $1.159 billion. That was our original budget that was then adjusted, has been adjusted. That's why we don't issue financial statements also in July and August. We do the first round always in September because there's so many changes going on during July and August. We're waiting for grant applications to be approved through the state. So we typically don't do a full financial summary for July and August. We wait till September because we have a better picture at this point. Actuals to date, again, we've received $205 million in revenues, most of that being from state sources, our FEFP, but our local sources, that will start to now increase as we go forward. On our expense side, again, the bulk of our expenses is always in the instructional functional area. This is broken out by functional area. So you can see the bulk of it being our instruction, $138 million. And then going down, the next one will be operation of plant. Obviously, all of our maintenance and our growing that we're having to do to support capacity of the increasing population of students. This table here, our budget to actuals on the revenue side. Again, you can see the majority of our revenues comes from the state, the FEFP program, but we'll start to increase here on the local dollars soon. This is a comparison of the first quarter of this year compared to the first quarter of last year. You can see our revenues compared to last year are down by 13%, but that's usually just a timing issue of when we start to receive some of those state dollars as well as some of the local money. Last year, I want to say we did have some, what we refer to sometimes as delinquent, but really past due property taxes that started to come in at the beginning of the year. So that's why there is a slight decrease there. But again, it's early in the year and those numbers will change. On our expenses, we are almost 3% above where we were last year. Again, you can see the bulk of that is in the instructional related technology, having to expand that one-to-one, plus putting new technology in our new schools, and as we're adding more capacity, having to keep up on that side too. This is the general fund expenditures, but broken out now by detail. So you'll see the function on the rows, but then on the columns, you'll see the big classification. Obviously, the bulk of our expenditures is between salaries and benefits. Almost 60% is salaries and benefits across all different functions, with instruction, our teachers being the bulk of that. This is that previous table just shown in a chart. Again, you can see the bulk of our expenses are all in the instructional realm. And this is it broken out by those classification categories. 107 million in the first quarter was our salaries, and then roughly 30 million for our benefits. Now, I should point out that the board and the union did approve the CBA, so there will be raises that are going to be in effect now in December, but those are going to be retroactive to July. So this is where we're at in September, but once we post that coming up now in December, those raises will be retroactive in the system back to July. So when you see the financials for January, it'll be a better picture of what our actual salaries and benefits are going to be looking like going forward.
I have a question about that. Then will the current budget be updated to reflect those raises?
The current budget already includes those raises. When we started the year, we set aside an amount, which is the amount that we bargained with.
Okay. Thank you.
You're welcome.
And so this graph here is taking these two items, the salaries and the benefits combined, and then showing it across the functional areas so that you can see clearly the bulk of our salaries and benefits again is over on the instruction side with 82.3 million. And this is a table that we started including last year. It's to show on a percentage basis by classification the difference between the current period to the same period prior year. And you can see our salaries are down 2%, benefits was down 13%, materials and supplies down 50%. It's usually a timing, also just the uniqueness of every year. Normally during the first quarter of every year, you have a lot of people that retire over the summer, and it fluctuates from year to year what that actually looks like, the cash outs that are paid to those employees for their PTO that they still have access to. So again, it's just comparing to last year, but again, there's a lot of nuance when you compare one year to the other. It's not precise as to, why those differences are there. There could be many reasons why we might see an increase or a decrease in any one of these categories. And here's our ending fund balance projections for the general fund. So we ended the year at 7.96 of our unassigned. The unassigned is that portion of the fund balance that is not restricted for any specific use. That is where we ended. 7.96 overall was 13.47. But that bottom number, the 7.96, is the one that the board has set a policy where they want to see that end every year at 5% or above. So we did meet that for last year. Again, part of that is a lot of the federal dollars that the school district has been receiving these last few years since the pandemic. A lot of the ESSER funds that are still ongoing, but correct me if I'm wrong, Heather, those are probably scheduled to end sometime soon, probably during this fiscal year, unless the government recycles it and opens it back up again or puts more money in it. We're looking at that ending this year.
But yeah, the closing date is September of 2024. They've extended the closeout period, but all expenditures have to be completed by then. So it'll bleed a little bit into next fiscal year, but just by a few months.
And so the budgeted ending fund balance that we currently have is showing us ending at 4.68%. Projecting it out now, given the trend of what we've seen just through the first quarter, we're looking at ending at 3.38%. But again, that number is going to change as the year progresses. And I don't anticipate that's anywhere near where we'll be ending. We should be more than comfortable that we will meet the board's policy of the 5% or above. The rest of these I'll kind of summarize quickly. I know usually the general fund is the one that we focus on the most because that's where the board does have a lot more discretion on how that funding is spent. On our capital projects funds, we have an ending fund balance of $223 million. Again, our revenues, we've just received 13.7 this year so far. Some of that is timing. When you look at the comparison to prior year during the period, you'll notice we're down 52%. The majority of that was resulting from impact fees, the timing of when those impact fees were received from the county. So many years ago, I believe the county would collect the impact fees and pass it through immediately to the school district. Over the last few years, that policy has changed. So the school district now has to formally request that from the county with a plan attached as to what those dollars are going to be used for. I believe facilities is already working on contacting the county to start to receive those impact fees again. Again, the majority of our capital projects comes from our local dollars, our impact fees, and the LCI, the local capital improvement property taxes that we receive. This is just showing where the bulk of those expenses are going. 65% is for facilities construction, and then roughly 35% are transfers out of the capital fund into the general fund, again, to support purchases of capital outlay and other items. For our special revenues, which is encompassed by our grants and our food service, you'll see to date we've received $68 million, which is, when you look at the comparison to prior years really quickly, it's up significantly compared to the same period last year, but that is also, again, a timing issue of when we're closing out some of those grants, especially the grants that roll over, like the ESSER grants, unlike some of our other grants, Title I and such, that have an ending date that match our fiscal year. So we do accrue what is owed back to the prior year. With these larger grants that have been ongoing for several years, it's all just in the timing of when we get reimbursed for the expenses that we put out. So that's why it seems like a larger than normal increase for this time of year, but it's just the timing of when we're getting those reimbursements. And And as Heather mentioned, those ESSER funds are due to end during the upcoming year. So something that we'll have to keep an eye on. Here's our special revenues broken out by the different functional areas. You can see, again, the majority is going towards salaries, usually in the way of our Title I funds, where a lot of our positions are funded through Title I. And then again, our food services is a large one as well. Here's our special revenue by classification. Again, the majority of our expenses is in the salaries, as well as capital outlay related to some of those extra dollars that we're getting that we're able to use towards capital. Our budget to actuals on the revenues. Again, this is early in the year, so a lot of our grants we don't get the final awards till September on some of them, so we can't start to draw down on them till those awards are finalized at the state level. So we have to spend the money up front before we can actually start to receive the revenues coming down. If you look at the expenses by function, again, the majority of it is over on the instructional side, with food services being the second largest area where we spend those special revenues. Again, those are restricted for food service use only. Here's our special revenue compared to last year. Again, as I pointed out, it looks like a larger than normal increase for this time of year compared to last year. But again, that's just the timing of when those reimbursements come through on those big ESSER grants. And again, our expenses are up 40%. Again, just the timing of when those dollars are getting spent and when we're getting reimbursed. Our debt service fund, we have an ending fund balance of $30 million currently. Revenues, of which is the bulk of that is just the transfers in that we do. Again, just the timing of when we have to transfer those dollars into those debt service funds to make those payments. And then our internal service fund, which is our health insurance. Like I said, that the board had committed to increasing the revenue on the board side. So currently we've put in $29.1 million with $32 million in expenses and an ending fund balance of $12.6 million. And this is just the same fund, our internal service fund, just a different presentation of it. And here you can see the breakout by the different funds within our risk management funds that we have, our workers' comp, our general liability, and then our group insurance being the largest one. Are there any questions, or, as I always say, if there's anything you guys would like presented or some data provided, I'll be more than happy to work on it and include it going forward, or I can research and send it out to you if you have any questions.
All right, hearing none. Thank you, Mr. Nunez. I appreciate that. It's always interesting to me to see it. I'm much more of a visual person, and seeing the graphs and where a majority of those funds go. So it's very helpful that we include those now. So thank you so much. All right, moving along. I think Mr. Witt, you're up now on the internal audit update.
Yes, thanks, Travis, and thanks, Align, for the information. I'm going to go ahead and share my screen. You did receive a summary of activities. I went ahead and summarized that summary in my PowerPoint here. So I'm going to share that with you all, and you can follow along as we go through it. We'll start with the special audits and investigations that we had. So before we begin, this summary is for August through November of this current year. So these special audits and investigations are things that are brought to the internal audit department's attention. Could be from a variety of sources, a principal, an employee, somebody who contacts us and says, hey, we see something that looks off to us. Can you please investigate? So that's how all of these special audits and investigations always start. The first one that we completed was at Westwood Middle School. There was a new principal that came in at the start of the school year, and she notified us that there was 2 different completed inventory forms on file. One of them had 1,000 less shirts and a cost of $7,000 less than the other. So obviously this, looked like a big discrepancy to her. So she let us know. We instructed the school to make a physical inventory count, and that count showed that there was an overage at that present moment of 473 shirts. So we did a deeper audit and investigation after that, and what we found was that the former principal did not have any kind of formalized record of shirts that he had given away. He did not have documentation to support sale of shirts that he sold back to the vendor. And when we looked at the previous year's shirt inventories for 21-22 as well as 22-23, both of them did not reconcile, and they both resulted in shortages of over 1,000 shirts per year. So there's obviously big discrepancies there. We referred the investigation to HR, and that former principal of the school, he did receive a disciplinary warning from HR for the discrepancies. So it mainly boiled down to just not keeping good records of all of the inventory at his school, and just poor accounting practices. All right, the next one that we had was Tenoroc High School. We first were informed about it through the accounting department because the school ended the year with a change fund shortage of $170. And again, this was under a former principal. So the change fund, just for background information, a change fund is a fund that the school will get at the beginning of every year in order just to make change. Typically, these are at athletic events, could also be at school dances, anywhere where people are handing them money and, they're having to make change. So the purpose of the change fund is that if we issue them $1,000 change fund at the beginning of the year, they redeposit $1,000 at the end of the year. And these change fund checks are issued in the name of the principal. So obviously the principal bears the responsibility for making sure that this change fund comes back whole at the end of the year. So this one was obviously an issue because they did not redeposit the full amount of their change fund. It was $170 short. And when we looked into it, we revealed that there was a lot of audit discrepancies regarding their ticket sales. So there was a total of 15 overages and shortages on ticket reports, and it resulted in a net overage of $213. As well, there was 75 missing tickets that were unaccounted for on ticket reports or end-of-year inventory forms. And there was 47 tickets that were reported as being sold twice at separate events. The former principal, he was issued a letter of expectation from HR, and he was required to repay the $170 from that change fund that was short at the end of the year. I personally did have a meeting with the current principal at Tinnerock, and we issued her a report of all of our findings, and we just went over the correct policies and procedures that they need to put in place moving forward, especially for ticket sales. Just making sure also that she's aware that staff, were informed of the correct procedures they need to follow when selling tickets. So. I'm going to let Davina talk to you about payroll audits now.
Hello, good morning. Can everyone hear me? Good. Okay, so this past 22-23 fiscal year, we completed the following payroll audits. Blake Academy, Jesse Keynes Elementary, Horizon Elementary, and Garner Elementary. Besides the typical findings, including principal not approving all payroll exemptions in SAP, non-exempt employees working unapproved time over and under, posting errors, and deficiencies with time records and leave forms, the following school had atypical findings. Jesse King Elementary had multiple SAP posting errors, which resulted in overpayment and underpayment to employees for additional time work. Garner Elementary had 97% of the school posting to SAP for leave and overtime was not approved by the principal. 2 non-exempt employees did not complete timesheets on file for the sample week. Custodial time cards were not approved by the principal, and multiple leave forms errors were found. Blake Academy, on the other hand, had no finding. This is a rare occurrence, so we took the opportunity to congratulate the principal and the payroll secretary on a job well done. We also issued the final summary report for all the payroll audits completed during the 22-23 fiscal year. And we issue a report and a bar graph of common findings for the past 3 years to the school board, the superintendents, management, and all the schools and departments so that they can see the typical findings that we see in the audits, and so that they could prepare for future audits. 6 out of the 20 school payroll audits that we completed this past year had more than the average number and severity of findings. That's 30% of the 20 schools that we did. For those schools, we recommended that the principal provided increased oversight to ensure that the payroll records are accurately accounted for. The most common finding for the 22-23 years were as follows. The principal did not approve all the payroll entries in SAP, which is an internal control deficiency. We found that in 18 out of the 20 schools, so that was 90% of them. Leave form errors or omissions in 18 audits, which is also 90% of them. Deficiencies in employees' time record, we found in 17 of them, 85%. SAP posting errors in 15 audits, which is 75%, and non-exempt employees working outside their normal planned working time without approval or adjustment to pay in 13 out of the 20, which is 65%. And unrecorded absences were found in 5 payroll audits, which was only 25%. And that's about it. Any questions? All right, so look, take it away.
Thank you.
I'm gonna just real quick, not a question, but a comment. I don't think, and now towards the end of my second term on this committee, that I've ever heard of a school not having any findings. So I echo that for Blake Academy. Absolutely outstanding. Again, I don't think I've ever heard of that. So that's awesome. And I would encourage to find out, when we see when something like that happens, to capitalize on that, not only doing what we've done and obviously congratulating them, but then find out what are they doing different than everybody else. How can we take those good practices that they have and hopefully encourage that district wide. Just a little note.
Absolutely. Yeah, I think that's definitely something that we should do. So yeah, we were very surprised when I think Davina was the one who did that audit. She was going through and was like, where's all the findings at? They're not here. Where are they? So it was a very welcome surprise. So we were very happy.
I have a comment or a question. What doesn't seem surprising anymore now that I'm on my second term is the high rate of principals not signing off on things. And at one point there was discussion about the system being changed to make it easier for them. Has there been any progress on that?
Heather, do you want to say something?
I can speak to that. Yes, ma'am, we are. So we're moving forward with an SAP upgrade, but that's going to take a couple of years. So in the meantime, Mrs. Pasco, who's our assistant superintendent of IT, myself, and a couple folks from her department met, and we actually have come up with some different reporting formats that include different types of information. So what happens every month, we send out a report and it shows gross to net, and it lists the employees with their gross salary and their net salary and what is used to compare. And I think it's a little bit difficult to understand. So what we're going to send out in the future is an active employee roster, a copy of leave that's recorded in the system. The report will pull it from SAP, and then also that gross to net report so that the secretary can put together the information for the principal to look at. This is the leave that's in the system. This is what we have leave slips for that's been signed and submitted. Here are our active employees, people that should actively be paid, and then this is the report of what they'll be paid. So with that packet of information, we're hopeful that the principal will be able to have a higher level of review, and it will also help them to feel confident in signing off on those forms in a timely manner. So we're working to streamline the process, but also help them to understand in depth what the impacts are, in addition to the audits that our internal audit group does, because they do a great job, and we do see that that's a recurring finding. So we continue to strive to find a way to help with that.
And then until these other updates take place, they still have to sign every form.
Yes, ma'am. And they do have the ability to research on their own and look at that. We just want to find a way. We understand they have a lot of competing interests taking their time. We want to help streamline that, but they do have the ability to obtain the same information. It just takes a little longer.
Okay, thanks.
You're welcome.
Thank you, Heather, for that.
You're welcome.
The next topic is outside support organizations. So these are booster clubs, PTAs, PTOs, things that are affiliated with the school district, but they're separate. They have their own bank accounts. They're required to fill out their own end of year financial reports. So leading into that, these organizations are required to file an annual financial report with our department at the end of every year, and those are due by August 1st of every year. So we send out reminders to the organizations to send in their reports to us. And this year we received an annual financial report for 105 out of 115 known organizations. So the organizations that did not send us an AFR, they will receive a finding in the internal funds audit from the external auditors, from Jennifer at CRI. It is a requirement and policy that those organizations send in an AFR every year. So the next item that we completed was a travel audit. So this is our method was that we reviewed a sample of in-county and out-of-county travel reimbursements to district employees. And we do this to identify areas of non-compliance with statute, with our own school board policies and procedures, and then also at the end to make recommendations on how we can correct the deficiencies that we see. The first finding was that our TDA form, which is an electronic form that's within SAP, it does not include required statutory language regarding the benefits accruing to the school district from the travel that is occurring. And this was a repeat finding from prior years, but we are happy to announce that the form was created within SAP and it is now being used, and it was started being used on November 1st of this year. So that has been added to the standard travel procedure. It's essentially just a box where the person traveling has to state what benefits their travel, whether they're going to a conference or a workshop, a seminar, or whatever it may be. They have to state how this will benefit the school district as a whole, in the areas of professional development, whatever it may be. So the next thing was that there was 2 employees who submitted travel reimbursements that were not due to them. One was a duplicate that was caught by the accounting department, and it was subsequently reimbursed by the employee. Continuing on with the findings, the amount of mileage was calculated incorrectly by 4 employees. There was also 4 employees who requested per diem that was not due to them. 4 reimbursement vouchers included the incorrect accounting information, and then 2 reimbursement vouchers were not approved by the appropriate level of management. And keep in mind, these things may sound, small. We're talking about 4 here, 2 there, 4 here. This is a sample of the entire fiscal year, and it's not a huge sample. It's a relatively small sample. So that's what we always like to remind people of, is that when you extrapolate this out, if you were to extrapolate it out over the entire year and to all employees, these numbers would get a lot bigger a lot quickly. So we do this just to kind of identify things that come to the surface, and then figure out where some of our bottlenecks may be, in a sense, and figure out where those common findings are. So kind of the conclusion, though, to the audit, the travel audit, is that the accounting department does catch a lot of errors before payment is actually made to employees. There's a dedicated individual in the accounting department who works with travel reimbursements, and they have a good process over there as far as making sure that the employee hasn't already been reimbursed, making sure that the mileage is being calculated correctly. So there a lot of the findings were caught by the accounting department. One thing that we did want to recommend is that just making sure that when employees are submitting travel reimbursements, is that they're accurate prior to submitting to the accounting department, because it does take quite a bit of time if you submit a travel reimbursement, and then it has to be sent back to the employee, and the employee has to change it, get it re-signed by the supervisor and sent back to the accounting department. It becomes quite a lengthy process, and oftentimes employees need the reimbursement of those funds, especially if it was a long travel or something that they're needing to be reimbursed for. So it's hard to make employees wait on hold for money that's owed them. So that's why we want to make sure that things are accurate before they're being submitted to.
Electronic process or a
We have is the P card audit.
Hey, Luke,
Yeah.
Luke, did you hear Chris's question?
No, I didn't.
Go ahead, Chris.
Yeah, I was asking, is the travel reimbursement process, is it a manual paper-based process inside SAP?
Yeah, so it's kind of a it's kind of a hybrid process. Our TDA is located within SAP, but then we also have a what's called a staff portal, where the employee has to go in and approve their TDA. And for in-county, everything is located within staff portal. So they can enter their trips. If they occurred in county, they can enter their trips as far as where they went, the dates, and they can code the funding information to there. For out of county, they still have to enter the TDA in SAP, approve it in staff portal, but it is a paper reimbursement voucher that they submit to the accounting department for the reimbursement of the mileage, the per diem, and other miscellaneous fees that occurred, as maybe parking, tolls, like those kind of things. So for out of county, it's kind of a hybrid. For in county, everything is pretty much online through SAP and staff portal. So
Did you find that the majority of these errors that were discovered through the audit process are related to the in-county activities or the out-of-county activities?
So just from looking at my bullets here,
I could chime in. It was out of county. Sorry. Yeah. It was mainly out of county, and it was manual errors.
Mm-hmm. Yeah, because mileage and per diem would only be for out of county. So yeah, mainly out of county.
Is there a project to merge these two separate activities so that we can reduce the risk of errors in the manual process?
That I'm not sure about. I have to let Align.
I'll speak to that. That is something that we want to explore when we do our SAP upgrade. Obviously, our SAP system is rather old, so it doesn't allow for some of that functionality. With the in-county travel that's done through the staff portal, the mileage calculations is less of a risk for errors, because those distances between our school sites and admin buildings is already pre-populated. So once an employee goes in and they put their travel from site to site, it automatically calculates that, and the rate of reimbursement is already built into it. With the out of county, because it's on a paper voucher when they submit it, I recall from getting this audit report over from the internal auditing team, some of them it's just where the employee picked up the wrong voucher form. So we follow the state's reimbursement rate, which they set at the start of the calendar year. So we have to there's a period of time where there could be some overlap. So we have both forms available for employees. We clearly, say on there, this is for use for travel prior to January 1, and this is for travel after January 1. But occasionally someone may go out to our document hub and pull the wrong voucher. That is caught here by our accounting team. And then we make sure that they resubmit it on the correct voucher form. But until we do the upgrade to the new SAP, this is the process we have in place. It's mostly a paper-based process for our out-of-county.
All right, thank you, Elaine. So the last thing that we have was the annual purchasing card audit. During the 22-23 fiscal year, the district had a total of 735 purchasing cards. These are all assigned to administrative personnel, and purchases from those cards totaled $7.9 million. We chose a sample of 38 schools and departments. That was a total of 40 card holders. And again, audit was conducted to identify areas of non-compliance with establishing purchasing card procedures and to make recommendations to correct deficiencies. The district auditors do rely on the internal card program is very large, so it's a very time-consuming and involved audit. Kind of the first finding, this was a broad finding, why I put it on the first page here, is that an online refresher course for purchasing card usage is required annually. However, the course was not made available to card holders during the 22-23 year. If you're looking at the summary of activities, it does mention under the purchasing card section that 4 card holders didn't take the annual refresher course. That was left in there from a prior year. That's not correct. The course was actually not provided to card holders this last year. So just clarification on that point. And continuing on with our findings, there was a late fee of $5,652 that was assessed for late payment of credit card balance. So this would have been when we paid Truist Bank for the entire balance of all of our cards. So it's the equivalent of you paying your credit card statement late. And obviously, since we have such a huge balance, we have a huge late fee. And I believe that was just because of staff turnover, like Align mentioned earlier during his presentation. This was during the summer of last year, and there was obviously a lot of turnover in the accounting department. So,
and Luke, if I could say something real quick, I actually made that payment. So whenever we make our credit card payments, we do a banking transfer, and we also make the payment online at the Truist account. So a couple weeks, we have our payments set up on specific days that we do. So during our turnover, I processed that, and a couple weeks later was informed that we had a late fee by the bank. So that you don't receive a notification when you make a payment, which is interesting to me. So since that time, we've begun taking screenshots of the page of the web page that says you actually have made that payment. So we've put a couple steps into place.
So that being said, we said the payment was made and we had no recourse saying that we made that payment and to refund the late fee.
Because we went back and forth for about a month. We had no proof, which is no proof that the transaction had actually been submitted, which is why now we take screenshots where it says your payment has been accepted. We don't receive an electronic notification.
How about a debit from the account that it was paid from? Wouldn't that be proof?
It did not come out of the account.
Oh, okay. That makes sense. Okay.
So like it gets transferred into a kind of like a wire account, and then that payment is pulled out of the account by the vendor. So we have a specific holding spot. It was never pulled.
Okay. I understand now.
So the money was transferred, the online payment was submitted, but it wasn't pulled from the account.
Got it.
Okay. And I apologize. I have to hop off for another meeting, but y'all are in fabulous hands with Align. Thank you.
Thanks, Heather, for that clarification. The next one was there was 2 instances of order splitting, disallowed purchases by 3 cardholders, and the last one, required documentation was not attached for 18 purchases by 8 cardholders from lottery and Title I funds. So those special revenue funds, they have separate requirements for the documentation that you have to attach for purchases made. You essentially have to state why it's necessary for being purchased out of that fund, and is it reasonable and is it allowable under the fund guidelines. We do have more findings. I misspoke. Insufficient receipts for 33 purchases by 20 cardholders. 186 account coding errors for purchases made by 34 cardholders. So these would essentially amount to school staff or department staff, whoever is coding the transaction in our P-card system. They use the wrong general ledger code. It should have been, maybe supplies, and they coded it to purchase services. That might be an example of an account coding error. The next one, TDA not attached for 43 travel related charges for 16 cardholders. So when we're making a travel purchase, we want to obviously make sure that they have the approval from the manager of their department to go on that travel. That's what the TDA is. It's the approval that the employee is approved to go on a travel related and spend money on travel related expenditures. So, and then sales tax was paid for 14 exempt purchases by 7 cardholders. We did have 4 cardholders out of the 40 that had clean audits with no findings. And at the bottom there, the asterisk. So all of the findings on this page, they would have been a lot more, but as I mentioned earlier, the accounting department did catch many of the errors and corrected or sent them back to the cardholder to fix it before it was finalized and fully approved in our P-card system. So we're grateful for the work that they do in this area. So yeah, that is it for the internal audit update. Was there any questions about the P-card audit or any of the other things that we covered here?
The only thing that I had would go way back to the top, and just a question about the shirt situation at Westwood. And in there it mentioned the principal did not maintain a record of sale back to the vendor. And my question there would we reach out to the vendor to see if there was any evidence of a sale back to them to account for that?
Yeah, so we reached out to the vendor, and he told us that the principal and him had gotten together multiple times over the course of the year to essentially iron out all the details of the shirts that were sold back to him. And I asked him to provide us with that, reconciliation that they did together. He stated that he couldn't do that because it would take him many hours basically to compile everything that they had talked about. Basically, he didn't have anything like on hand that he could send us, and he's kind of like a one-man stop shop kind of guy who runs the company, and he was essentially saying he didn't have time to go back and look at thousands of invoices and like compile all these records and send back to us. So yeah, Travis, that's, good question. That's something that we did, and unfortunately we couldn't force the vendor to, send us all the records that he says that he had, but we did try. So
now, would there be some type of policy in place where we could say, okay, well, if you're not willing to work with the district on providing records, then we're not going to authorize, service to you anymore. We're not going to use your services if you can't cooperate with us. That would be my next question, to remove them from a vendor list. I mean, it's unfortunate, and we want to support small and local business, but if they don't have proper accounting procedures when we require support, I would question why would we use them? That's all.
Yeah, and I think that is probably something we could talk to Mr. Craig in purchasing about, to see if there's any kind of, see if that could be an option. So I think that would be a good question. Yeah.
Okay. Anybody else have any other questions on the internal audit?
I would like to add one more on the Westwood situation. Has there been any follow-up audits of shirt inventory at the school that the former principal is now at, if he's still in a principal's role?
Yeah, so he's at a different school now. Are you asking if we've done a follow-up of Westwood again? Is that the question?
No, I would be referencing the new school that he is now at. If he had this issue at Westwood that resulted in all these findings, is the school that he's at now also managing inventory of uniforms, and does he continue to have the same issues at this new school because he hasn't followed through with the recommendations of improvement?
Mm-hmm. Yeah, that's a good question. So we will get an inventory form. We get an inventory form from every school at the end of the fiscal year. So this new school that he's at currently, we will get an inventory form, from them at the end of the year, and we will be able to assess at that time if it looks like there's discrepancies. To answer your question specifically, no, there hasn't been an audit of the new school that he's at this year. Typically, we would want to have someone from the school, reach out to us and say that they noticed something that looked like it was off, and then that would be our reason and justification for doing an audit of the school. Since it is a special investigation and not a routine audit, we don't have routine audits of T-shirt inventory throughout the year. Each school turns in their inventory form at the end of the year, and then they certify as to the information on the form. So no, there hasn't been an audit done of the school that he's currently at, but we will be getting a form at the end of next summer. And at that time, we'll definitely pay special attention to see if it looks like, there's discrepancies that looks like it might have happened throughout the year.
Good question.
Yeah.
Anyone else?
Yeah, quick question on the coding issues. So you have items that are going into the general ledger in the wrong accounts. Are those items being corrected once they're found? I mean, how do we know that the accounts are being stated accurately? And
So the accounting department reviews all the P-card transactions before they post them into the system. That's when they review the coding, and they will send it back through the Truist website. They'll send the transaction back to the cardholder or the secretary and ask that they code it to the correct accounting string that it belongs to.
Okay, so it is getting corrected in the system.
Yes.
Okay.
Yes, we don't. The accounting department doesn't finalize it and upload it into our ERP system until it's corrected.
Right. And could that just be a training issue and they don't know where they should be posting? Or
typically it's a a lot of times it's making assumptions of when an item is considered a supply versus when it should be equipment or furniture.
Okay.
Whether they're supposed to use miscellaneous expense for something, but it should be postage, things like that, where they're just picking the wrong account to put it in. I did want to jump in and mention regarding unallowable items. That's also something that the accounting department reviews prior to finalizing. I know from meetings with our purchasing department who handles the P card process on the front end, we're trying to work with vendors. Obviously, it's difficult because usually with a P card, all you can do is look at the merchant codes and block a specific vendor. But like, for example, Walmart, you wouldn't want to block someone from using Walmart, but then you don't see the transaction until after something has been purchased, and then you can call it out whether it's allowable or not, at which point you have to then tell them to either return it or reimburse the district. Surprisingly enough, though, with Amazon, for example, we have an agreement with them where if anyone uses the Amazon account with their P card to make a purchase, it doesn't automatically submit the order. It does get routed to our purchasing staff, and they review it before releasing the order. So that's a nice relationship there with Amazon. We're trying to explore that as well with Office Depot and other large vendors that we use the P card at a lot. But for right now, it's just that challenge of we don't catch it till after the fact, but we do make sure to review it, and we won't finalize it until we're sure that it was an allowable expense, especially if it's related to a grant. We may reach out for more documentation to make sure that purchase was allowable.
Thanks for that explanation.
Yeah, excellent. Anything else? All right. Hearing none, we'll open it up now for public comment, if any. Hearing none, we're going to go ahead and set our next meeting date for Tuesday, March 5th. As long as nobody has a problem with that, it's pretty far advanced. My schedule hasn't filled up to March yet, so I'm hoping the same with all of you guys. And if not, if it is, you're really busy. So, and I have sympathy for you. That being said, thank you all again for your time. I know this is something you sacrifice your time of volunteering, and we appreciate each and every one of you for contributing. And we want to say Merry Christmas and Happy Holidays to everyone. We will see you again in March. Meeting adjourned.